All right, everyone, welcome to another Reventure Consulting live stream. So glad to be with you all tonight. This is the first late night live stream that I'm doing, and so I'm so happy for you all to be here. And today's topic we're going to be digging into is the demographic decline in America. And this is something that not a lot of people talk about, but they should be talking about it, because quite simply, America is in trouble demographically. Population growth is plummeting. The number of people moving to this country, believe it or not, according to census data, is going down. The number of people dying is going up. The number of births are going down. And these things are bad for the fundamentals of the US housing market. Now, if you were to talk to most people in the real estate mainstream, they would tell you something along the lines of, there's just so much housing demand right now, and the demand is going to be so good for the foreseeable future. That's what so many people in real estate say, and they're all dead wrong. As I'm going to show you in this video, housing demand in America, while it might look strong today, is not fundamentally strong. And going forward, there's going to be big problems in the US housing market because the amount of people in America, the amount of people dying is going way up, the amount of people being born is going way down, and this is particularly a problem in certain housing markets in the US. And we're going to dig into this data first nationally so you can see the national trend, and then we're going to dig into the data market by market so you can understand what's going on in your city. I'm going to cover a lot of different housing markets in this video, so make sure to stay to the end. Make sure to request which markets you want me to cover. But the first place that we got to get started, everyone, is by looking at over time the changes in population growth in America, which is what this graph does. The yellow line is the annual increase in population in America going back to 1990. I know you can't quite see the early 90s here, they're cut off, but it goes all the way back to 1990, 1991. And you can see population growth, according to these US Census Bureau estimates, historically averaged around 2.5 to 3 million a year throughout much of the last 3 decades, all the way to about 2016. And then take a look at what happens, everyone. Bam! Population growth in America absolutely just collapses down to the lowest levels of all time in 2020. 2020 was the worst year for US population growth ever. 2021 is also going to be maybe the second worst year next to 2020 in terms of population growth. And the way that you really need to understand population is in 2 key things. There's 2 things which influence how much population grows. The first is this blue line, which is the natural increase in the population. So pay attention here. Natural increase is very simple. It's the amount of births minus the amount of deaths. How much the population is growing organically. How many babies are being born in a given city or nation in a year. How many people are dying in a given year. And this ultimately determines most of your long-term population growth, and subsequently housing market growth is natural increase. I want you to remember that term, natural increase. It's also referred to as organic population growth, births minus deaths. And then the other thing you need to monitor is the green line, which is migration. And when we're looking at this for America overall, this is international immigration into the US. And what you can see is 2 things in the trends of these components. Natural increase has been declining for about the last 12 years. It peaked in 2008. It collapsed by 2020. So back in 2008, we had plus 1.9 million due to more babies being born than people dying. That went all the way down to plus 700,000 in 2020. And this is because America is aging. America is aging. We're having less kids. More people are dying. Less babies are being born. This is just getting started, this trend. It's going to continue to get worse. And we're going to see in certain cities, this natural increase decline is very, very bad. And then you can also see that immigration has also gone down, believe it or not, according to the census data, over the last 4 or 5 years. So when you have this declining natural increase with this declining migration, that's going to lower your population growth and hurt your housing demand. And we're going to see in a second with a bunch of different housing markets how much this is negatively affecting different parts of the country. Now, of course, you might be saying to yourself, wait, how is this the case? I see a housing market today where inventory is at record lows, prices are going up by record highs. How could the fundamental demand be so low? And that's actually because this housing market demand is all fake. It's based off government stimulus checks, eviction moratoriums, foreclosure moratoriums, investors jumping into the market, people buying second homes. all things that are kind of peripheral in nature and are temporary and are masking the reality that the actual demographics underlying the U.S. housing market are very, very poor right now. But the thing is, they're not poor in all parts of the country. Certain parts of America are still growing their population, while other parts of America are losing their population. And you can see that on this map. We're taking a look at the largest 300 metro areas in America, looking at population growth over the last 3 years according to this US Census estimate. And again, if you're interested in the housing market and you're interested in real estate, this is the number one metric you need to be tracking for kind of the long-term fundamentals of your markets. How is the population growing? And the areas in yellow are growing well, are growing strongly. At Boise, Idaho, one of the strongest population growth markets in the U.S., plus 5.6% population growth over the last 3 years. Of course, that doesn't mean Boise is a good place to buy right now. In the short term, I think Boise is in one of the biggest housing bubbles in American history. But at the very least, in the long run, Boise is a high-growth market, as is in Austin, Texas, which grew its population by 6%, over 120,000 over the last 3 years. We see Dallas, Texas, with really strong population growth. Phoenix, Arizona added over 200,000 people in this 3-year span. And you can see if you go to Florida that it's a sea of yellow, meaning a sea of population growth in Florida. Lakeland, Northport, Sarasota, Cape Coral, Naples, all of Florida is yellow, actually, except for Miami, where the population has been flat the last 3 years. The rest of Florida is doing really, really well in terms of growing demographically, as is a place like Charleston, South Carolina, Myrtle Beach, and really much of the Southeast if you go into Charlotte, Atlanta, Nashville. It's really the Southeast U.S., Texas, and the mountain regions which are growing. At the other end of the spectrum, we have the red in the Northeast. Like, look at New York. Pretty much every metro area across New York into Pennsylvania is hemorrhaging people. If we go to the New York City metro area, we can see they've lost, get this, 165,000 people over the last 3 years, lost in New York. New York's population is declining. So the Northeast and then the Midwest, and a place like Chicago is also struggling demographically. Chicago's lost 79,000 people, in this 3-year span. Additionally, if we go to coastal California, we also have problems. A sea of red. LA has lost 127,000 people over the last 3 years. Oxnard's lost 0.7% of its population. Santa Cruz has lost 1.4% of its population. San Francisco's lost 28,000 people. And so really, it's a story of two different Americas. If you're in the Northeast, if you're in the Midwest, if you're in coastal California, you're in kind of a demographic decline, either because lots of people are moving out or lots of deaths, very few births, maybe a combination of those things. Going to be hard for those housing markets to grow in the long run. Meanwhile, Southeast, Texas, mountain regions, good demographic growth. I do happen to think many of those areas with good demographic growth are in big bubbles today and will have a housing crash, but in the long run, let's just say 10 years, they're going to do better. Now, I know some of you are already asking yourselves the question here. We're just looking at demand right now, population growth, people filling homes and apartment buildings. But what about supply? We need to look at supply. How many homes and apartments are being built? And then we need to analyze the growth in demand, population with the growth in supply to see whether that U.S. housing market's in balance or out of balance. Are too many homes being built? Are too few homes being built? And then applying that to specific markets, which we're going to do in a second. So let's dig into that right now at the national level, where now we're comparing population growth, the yellow line, to the orange line, building permits for new homes and apartments over the last 30 years. And what you can see is that historically, population growth is almost always higher than building permits, because if a baby's born, let's say, you don't necessarily need a new home for the baby, right? The baby's going to be in the same home as the parents. So it's normal that population growth would be above permits, which you can see by this yellow line being above this orange line. But take a look, folks, at the last couple years here. We have a new paradigm. Starting in 2019 where the two lines converge, and then in 2020, first year in U.S. history. This was a first in 2020. 2021 is going to be the same thing. We're building permits pulled for new homes and apartments, new homes, not teardowns, not renovations, new homes and apartments, exceeded population growth in 2020. This has never happened before. It means America is entering a stage where we're building more homes and we are populating the country. And this is, of course, going to lead to long-term secular decline in the housing market. But of course, as I've said already many times here, there's big differences among different metro areas. We have areas that are growing population, we have areas that are building lots of homes, and vice versa. So, how does your market look with this intersection of population growth, migration, and how many building permits there are? That's the key question you need to ask to make the decision whether it's a good long-term investment to buy today in a record housing bubble where prices have never been higher. Do you want to buy in your market based on the underlying fundamentals? Well, we're going to answer that question right now. And we're going to start by looking at Austin, Texas, the city I used to live in, the city I talk a lot about on this channel that I think is in a big bubble. Why do I think Austin's in a big bubble? Well, let's take a look. We know that Austin has strong population growth, this yellow line, plus 67,000 in 2020. That's like a crazy amount of people moving there per day. I think over 200 per day, or being born moving there 200 per day. But what you notice here, folks, take a look at this. The population growth in Austin has been very stable going back the last 15 years. It's just kind of stayed in this range of 50 to 65,000. And you can see the year-to-year variations in the population growth are really influenced by the migration. Some years the migration goes up, then it goes down. And this green line, the migration into Austin, really influences the variations, and then the natural increase is more stable but is actually on a steady decline, as it is in most of America. As more people are dying, less people are being born. And so as a result, we see Austin's population growth being stable. We see its population growth being stable, and we see the level of permitting, the orange line, the number of permits being pulled, largely matching the changes in population, which you can see by these blue bars, which is basically the difference, the surplus of the amount of people being added to Austin's population above the home building and permitting levels. These are the blue bars. And what do you notice? What do you notice here? The blue bars are actually trending down, meaning that Austin is building more homes and apartments now relative to its population growth than it did 15 years ago. Let me repeat that one more time. Austin is in less of a housing shortage fundamentally today in 2020 than it was in 2015. It had more of a shortage in 2015. It had more of a shortage in 2008. Yet, the one thing that's different is that home prices in Austin are up by 44% year over year. Home prices are up by 44% when the long-term average is 3.5% appreciation. Many people say, oh, well, that's because so many people are moving to Austin, they're not building enough homes. Well, wait a minute. We know that's not true based on data from the US Census Bureau. So by looking at this data, you can conclude Austin's in a housing bubble because there's no fundamental reason that home prices should be so high based on the population growth and home building. Let's take a look at another market, San Francisco, a place that's kind of heavily related to Austin. You see a lot of people moving out of California to a place like Austin or Salt Lake City. Let's take a look. We can see there's a lot more volatility here in San Francisco over the last 30 years. We have periods where the population growth is high, then it crashes down like it did during the last housing crash. Then the population growth pops back up in San Francisco. Then it crashes back down. Sorry, there's a car alarm going on outside. I'm going to close my window real quick. All right, let's get back to it. And so you can see right now, San Francisco is in a place where they're building 10,000 new homes and apartments, but the population went down by 27,000. That's why you see this red bar. People leaving San Francisco still building, that's going to put downward pressure on the housing market. Yet in San Francisco, prices are up 17% year over year, when it would seem like, based on this data, prices should be down in San Francisco. They're going up. So you can conclude, fundamentally, there's nothing that really supports these home price increases in San Francisco based on the analysis of population growth and home building permits. How about we take a look at a market like Phoenix? And in a second, guys, I'm going to get to your requests, but I'm going to hit a couple of these markets beforehand. We can see Phoenix has a very volatile housing market appreciation past. We're at plus 33% in Phoenix appreciation today in 2021. We were at plus 43% back in 2005. So Phoenix starting to get kind of like it was back in '05 in the last housing bubble. Of course, Phoenix then had a big crash back then a rebound. So the central question is, all right, is Phoenix in another bubble like it was back then, or is there something fundamentally supporting the home price growth in Phoenix? Well, let's take a look. Population growth in Phoenix in 2020 was 106,000 compared to 48,000 home building permits pulled. That's a difference of about 58,000, which means legitimately more people are moving to Phoenix or being born or not dying compared to the home building, which is good. But what do you notice is that Phoenix has always had this surplus, and in fact, it had an even bigger surplus back in '05-06 when Phoenix's population expanded in '05-06 by 164,000. So Phoenix's peak growth years were a long time ago. Like, people think today that Phoenix is in some new growth paradigm. No, Phoenix's biggest growth years were in '02, '03, '04, '05, '06, '07, '08. When you see these blue bars really getting high, more people moving there, being born, not dying compared to the building permits. And so today, Phoenix is in a worse demographic situation than it was 15 years ago, especially comparing to how many homes and apartments are being built. And this is really where you got to start scratching your head on the US housing market right now. Because while on one hand, inventory in Phoenix is super low and it seems like there's just so much demand, but yet when you look at the data, the growth in Phoenix from a fundamental perspective is not as high as it used to be in its previous peaks. Yet prices are going up to its previous peaks. That's a warning sign. That is a definite warning sign for a market like Phoenix, a market like Austin, where people are trying to say, oh my goodness, so much growth. No, we just looked at the growth historically. It's not that great. It's basically what it is or less than it was previously. So that's really important. So you need to look at this data for your housing market. And if you see that population is at the same level in terms of growth or below what it was before, especially in relation to building permits, maybe you should hit the pause button on your decision to buy into arguably the most inflated and bubble-driven housing market of all time. And so at this point now, I'm going to get to some of your requests. I'm going to try to cover maybe 15 to 20 housing markets here, everyone. So let's get into it. All right, what do we got? How about Boston, Massachusetts, everyone? Let's do Boston. I used to live there, as I'm sure you've heard me say before. Let's take a look at Boston in terms of this growth. All right, so Boston, you can see, kind of has a similar trend to what San Francisco had, where it has good population growth in some years and then the growth crashes down and we enter negative territory, meaning that we're losing population but building homes, which is bad for the housing market. And the last time this happened in Boston, there was a housing crash. Then population growth recovers, but now it's in a stage where it's declining again. People are moving out of Boston, as we can see. On this graph tracking migration, Boston had outward migration negative in 2020, and based on my readings of Redfin data showing home buyer interest, I think Boston's going to be negative again in 2021, which means that you should be cautious buying in this housing market, which has gone up 15% year over year. Now, 15% is actually kind of like reasonable in today's housing market compared to what we saw in Austin and Phoenix. So I don't think Boston is in a big gargantuan bubble, but I think there's some downside, right? Because if we're seeing a decline in population below permitting, that means more homes and apartments are being built than are being demanded. We're going to see some softening in that market going forward. How about another request? We have Orlando, Florida. Whoever requested Orlando, thank you for doing that, because I love looking at Orlando, particularly Orlando's population growth history. Take a look at this, everyone. Orlando's population grew by 31,000 in 2020. Take a look at that, 31,000. Significantly less than 2016, half the levels of 2016. Just think about that. So Orlando's population growth 5 years ago was way better than it is today due to the changes in migration. So we're in a downward dip in migration in Orlando. It's still positive, but not as good as it used to be. We can see Orlando had a previous spike in migration also in '05. So again, so important for you all to remember, don't be tricked into thinking that demographic growth in these cities is strong. Orlando's migration total in 2020 is well below the long-term average. Well below the long-term average. And we can see basically that compared to permitting, the orange line, Orlando is in its worst situation in terms of the relationship between population growth and permitting. These blue bars are at their lowest levels since 2000. Since 2000, in terms of how much Orlando is building to the population growth, yet home prices are up 20% year over year. Does that make sense to you? I know it doesn't make sense to me, especially when Orlando's economy is down 7% on its job levels from pre-pandemic levels. So I think Orlando is a market that has a lot of downside, especially if foreclosures start trickling through, the migration levels are down, the job counts are negative, home prices are way up. Is that the type of market that you want to buy in right now in 2021? I don't think so. How about Charleston, South Carolina? That is also a great request. Thank you for whoever requested that. Take a look at Charleston, everyone. Home price growth, Charleston. We're up 22% year over year in Charleston home prices. That is an all-time high. That has never happened before in Charleston history. Even in the last housing bubble, it peaked at 13 or 12%. So we're almost double Charleston's previous high in home price growth. So we need to see, or we should expect to see, improving demographics in Charleston to support this home price growth, right? Well, let's take a look. Population growth, all right, it's stable. I think it's stable. It's better than it was in the mid-90s when, to be honest, I don't know what happened here in the mid-90s. Maybe had some type of hurricane situation that caused people to leave. But basically since 05, 06, Charleston's been around plus 15,000 per year in terms of its population. So we have stable population growth. We have relatively stable home permitting, around 7,000 to 9,000 permits pulled for new homes and apartments. But then we have plus 22% home prices. And so, look, I'm not saying don't buy in these markets, because I think a market like Charleston or Orlando or Austin does have long-term good demographic growth. All I'm saying here is 22% appreciation when your population growth is stable and then your permitting actually goes up over the last couple of years to build more homes, that doesn't make sense. It doesn't make sense, and it suggests we have a downturn coming. I don't think the price crash in Charleston is going to be that severe. It's not going to be an Austin or a Boise level, but it's going to be there. It's going to happen. So let's take another request here. How about Jacksonville, Florida? I love these Southeast markets, super interesting. Let's take a look at Jacksonville. And what do we have here? Looks very similar to Charleston. You can almost, hold on one second. Let me put the graph up. Looks very similar to Charleston in Jacksonville. 25% appreciation year over year in Jacksonville. Again, never happened before in Jacksonville's history. So if we have price appreciation that's never happened before, we should expect to see something going on in terms of the demographic growth that's never happened before. Let's see if that's the case in Jacksonville. Do we have unprecedented levels of demographic growth over the last couple of years? The answer is no. Population growth is plus 26,000 in 2020, with 23,000 coming from migration, 3,000 coming from natural increase. We can see that this is pretty stable over the last 5 years and is very similar to the levels in the mid-2000s before Jacksonville had a big housing crash. If we compare this to permitting, we can see maybe more of an argument to be made that the population growth is exceeding permitting by a little bit more in recent years, but certainly not in 2020 when population growth only exceeded permitting by 9,000. That's kind of below actually the recent long-term average. Yet prices are up 25%. And I want to point you to Jacksonville in that last crash. It had a pretty big one. Prices went down by about 40% in total if you accumulate these 3 or 4 years where prices went down. And this is also a market, Jacksonville, where lots of homes are being built. Big increase in home permitting, as you can see, over the last couple years. We probably had a shortfall early 2010s, but not so much anymore in 2020. So lots of home building going on in Jacksonville. 2021, there's even more homes being built. It would be around up here. So be cautious buying, again, in this type of market where really we don't see the demographics supporting the situation. I got a request from Missoula, Montana. I am not sure I have the data for Missoula, but let's see if we do. All right, we do have the data for Missoula, Montana. I actually have a friend that's from there. So take a look. We have actually very consistent levels of population growth in Missoula, really around 1,000 to 2,000 people in Missoula, Montana coming in over the last, look, we're going back 3 decades with this data, everyone. You're not going to, there's a lot of context, and it's important to look at this context going back 3 decades. So you really can see that this is a stable growth market, and the permits are also pretty stable. How about home prices? Oh my goodness. Home prices are not stable in Missoula. 37% year over year when the typical average over the last 15 years is 4.8%. So let me ask you a question. Do you want to buy in a market that appreciated by 37% when the population growth related to permitting is around the long-term stable average? Do you want to buy in that type of market? I wouldn't want to buy in that type of market. And again, I'm not saying in the long run it's not going to be a good place, but expect prices to go down. If you buy in these markets that prices have gone up by 37% in a year, prices are going to go down. It's just the way it is. It's not a controversial take that prices are going to go down in a market like this. So just be prepared for that. That doesn't mean don't buy, but if you do buy, expect prices to go down by 20%. We got a request from San Diego, which is another really interesting market, kind of similar to some other markets in California. I'm going to take a look at LA after San Diego here, because LA is a really interesting one. But we got 25% appreciation year over year in San Diego. Recent data through Zillow. By the way, all this data is from Zillow's Home Value Index. You can look up this data for yourself. If you Google Zillow data research and go to the research page, download the data by metro area. Around 6.9% on average in the long run in San Diego, which is very high, which is why prices are so high. But we can see we also had a similar run-up in prices in San Diego in 2004 by 26%, and then we had literally like next 4 or 5 years price declines by about 35% in total. So how does the situation look in terms of population growth in San Diego? And let me actually go back a little further. We can see here that we had high population growth in San Diego in the early 2000s. Then it crashed down because migration crashed down. Again, migration is the green line, population growth is the yellow line, natural increase is the blue line. Natural increase is always more stable than population growth. Than migration. But we had this migration crash that coincided with home prices going down in San Diego. Then we had a rebound in migration, a rebound in population growth, but now we're in another downward trend in population. We're now building and permitting more homes and the population is growing into negative territory, which suggests to me, wow, this looks a lot like 2004. I don't necessarily think we're going to have another 5 to 6 year, 35% decline in San Diego, maybe 10, 15% correction coming though in a market like that. So you got to be prepared for that if you're in San Diego. How about Houston, Texas? How about Houston, Texas, everyone? What do we got in Houston? You can see a big difference already between Houston and San Diego looking at price appreciation, right? Our average in San Diego was 6%, now it's 3% in Houston. And, pretty low levels of appreciation historically, and then 19% appreciation year over year in Houston. Again, the question to ask, is there anything to justify this fundamentally in terms of demand for real estate? Well, let's take a look. Houston is a strong population growth market, 91,000 people in 2020, but you can see again that this is way below like long-term levels. Like 2014, 2015, Houston's population growth was almost double what it is today. So Houston's population growth double in 2014, 2015. What was it doing back then? 8% growth, 4% growth. Why is it doing 19% growth now is the question. especially when home building and permitting is at the same levels it was back before the last housing crash. 71,000 permits 2020, 72,000 permits in 2006. So Houston's another market that I'm skeptical of because I'm not seeing the underlying demographics to support these increases in prices. We got a request for Chico, California. And for those of you that don't know, I'm going to go back to this population growth map. Chico is in northern California. And you can see here that this area has struggled with population loss over the last 3 years. One of the worst population loss metros in America. Why is it? I don't actually quite know. I suspect maybe wildfires might have something to do with it. Maybe someone in California could tell me. But if we take a look at Chico, what do we got? Yeah, so we got, look at this. Migration just collapsed. Migration just, went way down 2019, 2020. Clearly this is related to something acute, like a wildfire, an earthquake, or something like that. And so what's going on here is, all right, huge decline in population. Permitting is up. Now, maybe some of that permitting is replacing damaged housing units or housing units that are no longer exist, but you don't like these negative bars. You don't like those negative bars, especially when we had 15% price appreciation in 2021, 15% in 2019. Pretty strong growth in the long run. We're seeing this growth in a market where population migration is heavily down. And so, again, there might be some extenuating circumstances to explain this one in Chico, but again, you just got to ask yourself the question, do you like this negative migration and population growth compared to the 15% appreciation? I know I don't. What else do we got here? Oh, the requests are coming through fast and heavy on this one. All right, San Jose, California, the Bay Area. We're going to stick in California here. I still got to check at LA. I haven't forgotten about LA. But this is San Jose. We covered San Francisco a second ago. This is San Jose. Wow. 9.7%. Are you paying attention to these averages? 9.7% annual average appreciation going back the last 25 years in San Jose. It's one of the highest in America. It's why home prices are 1.5 million, I think, for the typical home. And so do we like San Jose, which actually experienced a 10% decline in prices in 2019? Do we like it today at plus 16%? Well, let's take a look. We can see that migration has collapsed. And you're starting to see this trend, right, guys, where in California, it's like super volatile in these markets. Like it has increases in population and then big declines and people leave. And then it comes back and then declines and people leave. And so if we compare that to building and permitting, which we know they don't build a lot in San Jose, but over the last 4 years, more people have left than homes have been built, which is not good for the fundamentals of the housing market. And you're, in fact, already seeing softening in a lot of the Bay Area right now. We're not in like a full-scale crash mode there yet, but list prices have started to go down. And so I don't like a market like this. I don't like these negative bars, meaning, again, permitting is above population growth. I don't like that when price growth has been above 10% for most of the last 7 years. It suggests to me that there's something going on which can't be sustained and the prices are going to go down in a place like San Jose. All right, what about our next one? Our next one is going to be Los Angeles. And Los Angeles is a very interesting market. A lot of you don't know about how volatile this market is. And I apologize if I'm focusing too much on California. I'm going to shift to some other markets soon. So stay with me, everyone, if you're not in California. But we can see very volatile history in LA's housing market. And if this went back even further into the early 90s, which it doesn't, it starts in 97, we'd see actually LA in 97 was just coming out of another housing crash. From 91 to 96, LA had a big housing crash. Then it had a big housing crash from 07 to 2012. Now prices are up by 18% year over year again. What's going on with migration and population growth? This one does not look good. This does not look good, everyone, for LA. Couple things going on here. Number one, note the substantial long-term decline in natural increase. In the early 90s, LA was increasing its population organically by 180,000. More babies being born than people dying, plus 180,000. That's now all the way down to 46,000. So from an organic perspective, LA's growth is plummeting. But then from a migratory perspective, it's also plummeting. So In 2020, 120,000 people fled LA more than moved to LA. That's not good. That's really bad. So you combine these two, and for kind of the first time ever, LA is 3 straight years of negative population growth. Not a good situation. Now, you can see LA's been through this before. Early 90s, declines in migration. Then migration ticked back up to at least even. Declined in 06, 07. Got back to even. Now we're declined again. We're declined again when prices were up by 6 or 7%, then 18%. So again, the story that this is telling me about LA is not a good one. We are in long-term demographic decline through natural increase declining, aka more people dying, less babies born. And then we have migration going down. So the question is, like, who is buying homes in a place like LA? That's a fabulous question because the underlying demographics don't suggest that the fundamentals are there. So I think it might be a lot of investors buying homes in LA, might be foreign buyers, might be people buying second homes. A lot of non-fundamental demand, which, non-fundamental demand can prop the market up in the short term, but in the long run, it's going to go to the fundamentals. And so LA, most volatile housing market in US history over the last 3 decades, I think has some downside. Maybe not another 35% crash like last time, but maybe 15 to 20%. So if you're buying in LA, just be prepared for prices to go down. Fundamentals don't support what we're looking at here. And wow, these requests are coming in fast and heavy, everyone. All right, let's take a look at the Northeast. I haven't paid enough attention to the Northeast. How about New York? The New York metro area, everyone. The New York metro area. We can see a very similar situation in LA. Take a look, guys. Like, all of these big cities have very similar stories in that the migration kind of goes way down, gets back to even, goes way down, gets back to even, goes way down. And now what's unique about today, though, is we're pairing this migration decline with natural increase going down. For the first time ever, the organic population growth in New York, which was 120,000, is now 63,000. So what's going on in relation to permits? Well, we have some red bars here, which is bad, meaning that more home building, we could see 55 to 60,000 permits in the New York metro area, pretty consistent over time, yet the population is plummeting, population growth plummeting into negative territory. That's bad for the housing market. It means fundamentally the demand isn't there. Yet prices are up 14% in New York year over year, which isn't like crazy compared to the rest of the housing market. I don't think New York's in a massive bubble, not like maybe it was back. You could see here the growth that New York had in the early 2000s was crazy. It strung like 5 years in a row together of plus 10%, but it's been pretty muted in recent years. So I think New York might have a small correction. Manhattan already did have a correction, but I think the whole metro might have another correction of maybe 10%. I don't think it's going to have a big crash, but I also don't think New York's going to have like real long-term growth because when you look at this, the migration down, the natural increase down, it's going to be tough to recover from. It's going to be tough to recover from. All right. How about Atlanta? Atlanta. Hotlanta, as they say. All right. And so again, this is a great example. Why in the Sun Belt, you need to just be utterly skeptical of anyone who tells you that the growth is so good. Because Atlanta's population growth is 61,000 in 2020. Combined 34,000 from migration, 26 from natural increase. You could see that this is just well below what it was historically. We were at 100,000 in the 90s. We were at 174,000 in 06. So Atlanta is growing less than it used to. Burn that into your mind if you're a home buyer, real estate investor in Atlanta. It's growing less than it used to over the long-term average. Now, it's also building fewer homes than it used to. It was building 69 to 74,000 homes before the last housing crash. Now it's building 30 to 40,000. So it's building less for the declined population growth. But we can see here that the surplus of population over permitting is around 30 to 40,000, which is again below the long-term average. So the surplus of population growth over building permitting is below the long-term average, yet we have 25% price appreciation year over year. Does that make sense? That Atlanta, which never really recorded anything in the double digits before, would be at 25% when its population growth is actually the lowest. This is the lowest it's been in the last 30 years in Atlanta. Yet the appreciation is the highest it's been. That doesn't make sense. And we know that Atlanta is a market that's dominated by investors. Nearly 1/3 of all the homes in Atlanta purchased by an investor in the third quarter of 2021, according to data from Redfin. 1/3 of all homes in Atlanta bought by an investor. These investors are supporting this price increase. These investors are going to be the first ones to leave when Atlanta inevitably has another dip in real estate values. I don't think it's going to have another 35% cumulative dip like it did back in the mid to late 2000s, but it's going to have a dip. So be ready for that if you're buying in Atlanta today, and don't listen to anyone that tries to tell you that the growth is higher than it was. It's actually the worst it's ever been. All right, let's do a couple more, everyone. Someone just requested San Jose. I already did San Jose. We got a couple Dallas, Texas requests. Let's do Dallas. That's the city I live in. All right, Dallas is at 23% year-over-year home price growth compared to a long-term average or median of 3.4%. So we can see Dallas already, you're skeptical. You're like, we were at 3.4% long run. Now we're at 24%. What's going on? Well, clearly we must have just huge levels of population growth, right? Well, we have plus 120,000 in 2020, which is good, but actually kind of below where it was in 2015, 2016, below where it was in 2006, below where it was in 2001. And we can see the components of this growth. Migration, 75,000, is below where it was 5 years ago. So get this. The migration into Dallas in 2020 is below where it was 5 years ago. Fewer people moving to Dallas today than 5 years ago. But 5 years ago, the price appreciation was 10%, which is actually high. But in fact, the amount of people moving to Dallas in 2020, less than 2001, less than 2006. Back then, the price growth was 1%, 2.5%. And so this is yet another market in the Sun Belt. Like, are you guys detecting a theme yet? These Sun Belt markets have record appreciation above what they've ever done before. They've never done this appreciation-wise. Dallas, historically affordable. It's never been like this. And there's no fundamentals supporting that home price growth. And that's the problem in Dallas. That's the problem in the rest of America right now. We're not seeing the fundamentals there. What about Las Vegas? Is it a similar situation in Las Vegas? Which, like Phoenix, volatile, plus 40% in 2004. Then we had some of the most brutal housing price declines ever in Las Vegas, 2008, 2009. Prices went down cumulatively 62% in the last housing crash in Vegas. Then they bounced back, plus 10, plus 15%. Now they're up to plus 25%. So what's going on? Are we seeing an increase in migration? No. Migration is well below where it was in the 90s, all the way up through 2006. So in the 90s, in 2006, all the way up to 2006, migration into Vegas much higher than it is today. 25 years ago, migration higher than it is today. The natural increase peaked in 2008, has been on decline since then. Lowest natural increase ever in Vegas' history, at least in the last 30 years. How does that relate to building permits? We can see actually that the building permits, look at this folks, the building permits almost like perfectly track the increase and then the decline and then kind of the increase again in population. So we actually have a very stable, look at how stable the blue bars are, which is again, the blue bars are the surplus of the population above the building units and the building permits. And this is kind of funny because it actually suggests not that we have this big shortage of housing in America. It suggests that the decline in building that occurred during the last housing crash, it was just reacted to the decline in population growth and household formation in many markets. And so you probably know where I'm going with this on this one. If we're below the long-term average in Vegas in terms of population growth, at the long-term average in terms of surplus above permits, why are we plus 25% on prices, especially when jobs are down 8% in Vegas since the pandemic? That's the thing no one likes to talk about in Vegas. Jobs are down 8%. That's a massive recession. Vegas is in a massive recession. No one's telling you that. I'm telling you that. Data from the BLS says that those job declines hidden. They're hidden by all the fiscal stimulus, all the crazy things going on. They're going to come to roost at a certain point. Vegas, like Orlando, is a market that I'm not a fan of right now. I don't think it's in the Austin or Boise type bubble, but there's some definite downside. There is some definite downside here in Las Vegas. We got an Oklahoma City request, so let's get to that one. All right. Historical Oklahoma City appreciation, you can see, is stable. 4%, really close to this 4% range for most of this time period, and we've entered this new paradigm in Oklahoma City, plus 14% in the last year. So many of you know I'm a fan of Oklahoma City. I almost moved there, actually. I spent a lot of time there the last couple months. I do think the market's like in a little mini bubble, maybe 5-10% correction, because this is clearly not supported historically. But let's take a look at the growth. We can see, actually, again, population growth does not support the increase in values. Even though the population growth is good and the migration is good and positive in Oklahoma City, we don't see the support for the 14% year over year. When we bring permitting into the equation, it's again the same. The surplus of population above permits is no higher than it's been historically, actually lower than it was historically. So a place like Oklahoma City, I think there's some downside, but it's not going to be crazy downside. So you could probably buy today, expect a little bit of a correction, but nothing nuts. Nothing nuts. Let's see here. Someone asked a question, are there any areas I'm in favor of outside of Oklahoma? I think in general, the Midwest is probably an area where you might want to look. So Columbus, Ohio, you can see here, looks kind of similar to Oklahoma City, 4.2% long-term average. Then we jumped in Columbus to kind of a record, but we're not like too nuts. So generally, here's my methodology, everyone. Here's my methodology, and I'm just going to pause kind of the graph for a second. So if your market has 30% appreciation, it's going to go down. It's going to go down, especially if home building's up. If your market has 10% appreciation during this bubble or 15%, it might correct, but it's not necessarily going to crash, right? For a crash, a real crash, you need to see that 25% growth year over year. And you need to see that kind of cumulative over 5 years, 70% growth or 80% growth. That makes a market crashable. In Oklahoma City, or a lot of markets in the Midwest, aren't really crashable because the prices haven't gone up nearly as much and the cash flow yields are better and more locals can afford homes. So that's kind of my methodology there. In a market like Columbus, Ohio, we can see, again, population growth went down in 2020. Are you sensing this theme, everyone? It seems like pretty much everywhere the population growth went down, the migration went down. The home permitting went up, so this is actually not looking so good in 2020. Permitting and population growth in Columbus was equal. So this is a market which, again, I like Columbus. I lived there for a year. I think it's very underrated, but there's definitely some downside here. Again, it's not crash downside, but price is down by 10%. Yeah, that could definitely happen in a place like Columbus. All right. I got to wrap things up soon. So I'm going to do three more. Get your requests in. We got a request for Tampa. So let's get Tampa in the docket here. Tampa, Florida. Crazy housing market, super low inventory. Why is inventory low? Or I guess why are prices high? Because inventory is low. Prices are up 29% year over year in Tampa. 29%. We can see the last time Tampa did anything like this was 2005, plus 24%, and then prices collapsed. Down by 10, down by 19, down by 18, by 5, by 12%. In the last housing crash, Tampa went down by 50%. 50% in the last crash cumulatively. And now we're up by 29%. And so again, not to sound, not to beat the drum, sound like a dead horse, but do we see growth? All right. Well, we see certainly high levels of population growth and migration, right? Plus 49,000 migration in 2020. Again, like Orlando, below what it was in 2016. So again, fewer people moving to Tampa now than 5 years ago. Fewer people moving to Tampa now than 04, 05. And interestingly, take a look at this, guys. Natural increase, negative 5,000 in Tampa. Tampa has now entered a situation where it's organic population decline. More people are dying than are being born in Tampa, and that's just going to get worse. over the next 5 to 10 years. Baby boomer generation is getting older. Tampa has a heavy senior population, particularly Pinellas County and Clearwater and areas like that. And so we're going to continue to see natural increase go down, which is going to put more pressure on migration to support the home prices. Home building is relatively stable, 24,000. We can actually see, there was a real shortage of housing in 2015, 2016 in Tampa. So maybe some of the appreciation is justified, but certainly not 29% year over year when we're entering natural organic population decline that we know is going to get worse because the U.S. population is aging. So that's a situation that's problematic. All right, we got a request for Chattanooga, Tennessee. Chattanooga, Tennessee, which is a city I like. I visited there last year. And we can see here that Chattanooga, pretty stable population growth, around 5,000 each year. The migration is really driving the population growth because, hey, take a look at this, guys. Natural increase again, negative territory. Chattanooga, negative natural increase. More people dying than being born. COVID had something to do with that a little bit, but this is just a trend that's going to continue because the population is aging. And so you don't like to see negative organic growth, but let's take a look at how this combines with permitting. We can see pretty stable, permitting up to 3,000. We can see the difference is pretty stable. We actually were flat in the 90s and 2000s. So pretty stable, not like we all of a sudden have a big housing shortage in a place like Chattanooga. But what are prices looking like? All right. Right, so guys, look at this. 22% year over year. 22%. Nothing like that's ever happened in Chattanooga. The previous high was 7, right? 2017 and 2005. So we know that Chattanooga is in a bit of a bubble. This is a market, I think, 9 months ago. If you actually go back 9 months on my channel, when I had some of the markets to buy in back in the winter and spring, Chattanooga's up there. But it's since become crazy. It's since become crazy in Chattanooga. And I'm just, you just know that there's going to be downside. And there's a lot of investors pulling into this market. And plus 22%. Not justified, but what we're seeing here on migration and natural increase in population. So that's problematic. A couple of you have requested specific markets, like Jersey City, I see here, Union City, New Jersey. I cannot cover those in this video because this data is by metro area. So a lot of those places would be in the New York metro area. What I would suggest you guys do, this is New York, big metro. What I would suggest you guys do for Jersey City or something specific, go to Realtor.com's data page, download data by zip code. You could download inventory data by zip code and look up your zip code from Realtor.com. All right, and we got one last request here. Norfolk, Virginia. Did I spell that correctly? I actually think that would be under the Virginia Beach metro area. And we can see here, Virginia Beach, Norfolk, well, we got declining long-term growth. We have quite a few years of negative outward migration, declining natural increase, a heavily declining natural increase. So population growth, the yellow lines in decline in Virginia Beach. What are permits doing? Permits are pretty stable. We see the difference between population and permits is pretty stable. We see home prices up 15% year over year with a long-term average of 2.5. So Virginia Beach is kind of a low growth market in the long run, which suggests it's probably not in a big bubble. There's probably no big bubble in Virginia Beach, but at the same time, 15% probably not justified. If you buy there today, Virginia Beach, Norfolk, expect maybe a little correction, but I would not expect a big crash. All right, we have a couple more rolling in. I'm gonna do a couple more, everyone. Let's extend it a little further before, maybe my camera just might die at some point. So if you see the screen go black, it probably means my camera died. Charlotte, North Carolina. All right, Charlotte, 25% year over year. Again, you're seeing the trend, right? This looks pretty similar in a lot of markets. 25% year over year after not really appreciating much in the long run. 4.7% in the long run. So what's going on in Charlotte? Do we see support for this? Well, we see strong population growth, 44,000. We see strong migration, 35,000. We see declining natural increase. So the natural increase in the population in 2020, half that in 07-08. So we have kind of a situation where population growth is high, less than it was in 06-07. Compared to permitting, we actually have less of a surplus in recent years in Charlotte compared to permitting than we used to, yet home prices are up 25% year over year. So this is not a market that I think is going to do too well. I mean, look, maybe 20% downside in Charlotte. Prices are going down. I don't know by how much. 20% is my gut instinct. Doesn't mean don't buy today, but it means that just expect prices to go down, especially in a rising interest rate environment. When prices go up by 25% in a year, after a 9% increase, when population growth is no higher, prices are going to go down. And so that's the situation. And all right, everyone. So that's it for requests. Hopefully I got to your city. If I didn't get to your city, maybe leave a comment on the video. Make sure to like the video. Definitely make sure to like this video so more people can see it. And then after you like it, leave a comment, not in the chat, but in the comment section of the video after it posts. And I'll try to get to you. I'm not going to be able to get to everyone, but if I missed your market, leave a comment, like the video. And I just want to end on this. I'm going to end on this after this nearly hour-long video is this. The demographic fundamentals in America are not good, objectively. There is no arguing this. The data on population growth is bad. It's the worst it's ever been, and it's going to get worse as our population continues to age. This has happened in other countries, and it's going to happen here. It's the simple reality, and that's going to mean less demand for housing in America, and it's going to mean a kind of bad housing market in the long run. There's certain markets that, like in New York and California, that are really struggling, and I think in the long run are going to not appreciate by very much. There's markets in the short run, like Boise and Austin, that are doing really well that I think are going to have a big crash. But after that crash, in the long run, probably are good places to be. But in general, right now, fundamentally, there's nothing that supports what we're seeing in the US housing market, at least when it comes down to bodies, people who need to fill housing units. The fundamentals aren't there. It suggests that investors, second home buyers, and speculators are the ones propelling this housing market forward, particularly in the Sun Belt. So that doesn't mean don't buy today, but it means that if you do buy today, just be prepared for prices to go down. In most markets, it's probably not going to be a major 40% crash, but 10 to 20% corrections across a lot of markets, very realistic, as much as 30 to 40% in some of the big bubble markets I've talked a lot about. So, all right, everyone, I hope you guys enjoyed this. Thank you for joining me on this live stream. Really appreciate all of you guys and you taking an interest in this data. I'm very passionate about it. I'm glad you guys are passionate about it as well. I'm going to try to do maybe one of these live streams a week. It's a good time for me, and I think you guys like it as well. So until next time, this is Nick